Hello, everyone. This is Teddy Keckstedt from Forex Trading Unlocked, and we are here on Monday, August the 9th, for an August 9th through 13th weekly Forex analysis, Forex trading and cryptocurrency trading analysis for you. So, we have our disclaimer up right now just to remind you that this webinar is for illustrative and educational purposes only. Take a look at that real quick. And if you haven't done so already, please subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked, and check out our book, High Probable Japanese Candlestick Patterns, available on Amazon.com and paperback, in both paperback and Kindle versions. We also have a special coming up for our book on Amazon, which, if you hang on for the webinar today, you will find out all about it. All right, so now we have our live action screen pulled up. And from our website, forex-trading-unlocked.com, we're going to go to our navigation bar, pull up the workstation page, and let's get things going right now. Let's see what's going on in the world. All right. First things first, what are the numbers that matter this week? Well, we have some big numbers coming out that will be definitely very important for the marketplace this week. As you know, we had unemployment on Friday. That was a very, very big number. It came out a little bit lower, which is what was very much desired. There was mixed reviews on what people were thinking would or would not occur. It is a very special number now for the markets. The economic numbers have kind of been sidestepped last year because of the pandemic and the fact that we knew that things were obviously not normal, that's for sure. So, things are starting to get back to normal financially, at least, which is a good thing. So, we have some auctions today. That's basically not a big thing that's going to really shake up the dollar at all, really much today. We have a current balance of account for the Japanese yen. That may actually cause a little bit of a stir there. We have economic sentiment in Germany. Yeah, that's going to be kind of watched as far as when that's going to, what that's going to do tomorrow. We'll see. I would assume that it's going to show somewhat of a lag going on in their economy. We have labor costs coming out for the U.S. dollar tomorrow as well. That will be something that will be interesting if that number. The forecast is 1.1%. I would assume that the actual is going to probably come out maybe even higher. So we'll see how that number reacts. We have the COVID numbers, obviously, for the EU coming up, also on the 10th. On the 11th, we have CPI for Germany. That is going to be a big number. That's going to shake up the euro and the U.S. dollar, and could also play into what's going on with the British pound and a couple other currencies out there as well. CPI also we have coming out for the United States. That will be a number to watch. If you are not watching that number, that will be your mistake. There's going to be plenty of traders that will be watching this number. It is going to come into play. I would not hold back on watching that number, because if you're trading during these hours when CPI comes out, this is 7:30 Central Standard Time. I'm just telling you, odds are it's going to shake up the bond market and the 10-year market. If that occurs, especially if they get a big sell-off, then you're probably going to see a dollar rally. If they get a big rally in the interest rate markets, you could see a big dollar sell-off. So be very cautious. Like, we have the potential to have some very, very wide skewing volatility coming up over the next few days. Now, also on Wednesday, we have the weekly crude stocks. Right now, oil, we're going to take a look at that. That does have a bearing on the markets. Overall trend has not been an impact. We kind of called that one really well. When oil topped out around $75, we have a $100 price target overall later this year. But we were looking for some digestion, and we've had a little bit of that between $75 and $68 a barrel. It'll be interesting to see whether or not we start to lay on support this week. Or do we start to rally again with demand for gas possibly going up over the end of the summer, with kids getting back to school earlier than normal and stuff like that? You can expect a lot of people are on vacations these last couple of weeks and going into the next couple. And then after that, we have everything coming up back online for September much quicker. All right, almost done with looking at these numbers. All right, so we have GDP also for the British pound on Thursday. That's a big number. Industrial production coming out for the EU. That's a big number. And then PPI. That's another one. So we have unemployment that we had last Friday. This week we have CPI and PPI. These are two big interest rate numbers and currency numbers. So do not be forgetful when it comes to 7:30 in the morning on Wednesday and Thursday of this week. Also, you have jobless claims coming out at the same time as PPI on Thursday. You're going to have people totally watching the jobless claims. That's going to be a big deal. All right, you also have a big bond auction also going on. So then we get to the 13th on Friday the 13th. Yay. Import prices, that's going to be a big number to watch. And then that's pretty much it for the week. All right, so now let's get back to what you guys are really here for, which is the live charts. And we do have a live trade going on, so we will tell you all about that in a little bit. All right, so let's clean up this, get rid of the volume here. So as you can see, the dollar, U.S. dollar, had a little bit of a follow-through from last Friday's big blow-off rally for the U.S. dollar, meaning that the other currencies went down against the dollar. You can see that Friday there was a big drop in the euro. Overnight, the market came and made a newer move low. So it kind of double bottomed on Friday. And then overnight this morning, early this morning, when the euro first opened, the dollar was a bull. And it ran out of gas. So I think basically what you were seeing this morning when the markets opened up was Europe following through from what had occurred on Friday because their markets were closed. And now you have what's going on now, which is we have a little bit of profit taking, and I think they're waiting for the U.S. markets to open up, which will be in about 20 minutes, and we will see what kind of action we get from that. All right, so let's look at the euro here and see what we got going on here on an hourly basis. You can see that we really came down pretty hard in 1 hour's trading. This was early in the middle of the night. And we got down to, was it 117.24. So basically, 40 pips below where the market's trading right now. It's in a holding pattern. As you can see, the majority of the trading has been going on between 1743 and 1766. It's a chop zone. But we've been making lower move lows and lower move highs. We're coming off a lower move low on the hourly basis. I would use caution right now. Do not try and pick a bottom or catch a falling knife. Dollar strength, even though it seems to be waning over the past, this is going since midnight last night. We could just be seeing a knee-jerk reaction. We got to remember that the dollar has been rallying against the euro for the past over a week. We go back from here was the high, our lower move high, and then we have 1, 2, 3, 4, 5, 6 days into today. This makes our finally we have a day that is slightly positive. Are we bottoming? I don't know. I think we're just riding this little core of resistance. You can see how the market struggled to get below this area before. It was a grind higher, except for Friday. It was not much of a big slide. I mean, and also if you look at the range, you have the body where we closed on Friday at 117.58. We opened up at 118.32. So it's not the biggest range. It was just an aggressive sell-off because it was leaning on the lows and riding support all day long. All right, so let's see where we're at now here. We have this trend. All right, so the trend is in place. Downward sloping support. Lower move lows, lower move highs. The question is, it's hard to look at the dollar index for an indication of things because the euro seems to be the one, which is the number one component also in the dollar index. That's the one that has been driving this rally in the dollar index. Most of the other currencies haven't been acting and supporting that so much, but everything fell apart against the dollar on Friday. So let's see how things are shaping up today and where we're looking for things to go. The biggest thing here with the euro is that unless we get above this high from a little over a week ago, around 119.11, this market remains in a bear trend. This is the last lower move high. We've just made a lower move low. The question is, are we going to press support or are we going to bounce back? Oops, sorry about that, folks. Thought I had the volume off on that one. So, anyhow, we have... I'm going to shut the volume off. Don't want you guys to be disturbed again. My apologies for that. Okay, there we go. Volume's off. They can wait. All right, so sideways could be the call. Now, remember, we said we had a bunch of big numbers. They're coming out on Wednesday and also into Thursday. I would be mindful of that. I think we're going to be kind of playing off the U.S. Equity market today as far as when we will start to see a shakeup with the currencies. It will be most likely when we hit Wednesdays and Thursdays numbers. So if we go to the futures, everything in the futures we have to show in a delay. On our website, everything is in pretty much real time for most markets, except for the futures, which by law we cannot have flowing through our website in real time. All right, so U.S. Treasury bond market was negative on the week. It posted its first negative week in a while. And we also had a 2-day sell-off. This was unemployment. So the key right now is, where are we going with the interest rates? Interest rates are a factor of currency pricing. So we're going to go right to the CME website because it's in a delay there. Now, as you can see, it's kind of flat for the Treasury bonds and the 10-year notes. 10 years are slightly higher, 30 years slightly lower. It's really next to nothing. We're down one tick here. We're up a tick and a half in the other one. So, excuse me, the interest rate market is hanging on the stock market opening today. This is why the range for the U.S. dollar is pretty tight in the euro. And I would expect right now, while the bonds are rather neutral, to potentially getting a little bit of a lift, a little profit taking, since they've been hit pretty hard the last couple of sessions. If the bonds in the 10-year start to rally, its odds are we're going to see a little follow-through to the upside with the euro-US dollar, meaning resistance will be in play. Let's go back to the hourly. So hourly basis, we still are in a bear trend. I would be mindful of this, but by attrition, we're coming into it over the next couple hours. So if we can get above this 117.80 mark, I think you're going to have a really good chance of us getting back up towards this higher resistance area of 118.60. That will probably be where we're going to run into a lot of selling pressure, and then I think you're going to fall back into a sideways to lower trade. So right now, I'd say the next couple hours, be mindful if you are a bear in the euro-US dollar. I would look for a signal to sell into later in the day. Right now, I think at least until unless we see a very severe sell-off in the U.S. stock market, I don't think you're going to see a big reaction in the euro-US dollar. It could be a grind today. So we'll see, as we're only 13 minutes away from the equity markets opening. So we're going to start looking at some other currencies, and then we'll see what happens when the equities start flying around. Okay, so let's go to the British pound. U.S. dollar is the second biggest component in the euro-US dollar. This one doesn't look so bad. This is a big sideways. So as the year, let's say that we've been saying for the past few months now that there's divergence in the currencies. We have free-flowing currencies again. They're coming back online, not being so one-way trending, whereas for basically 14 to upwards of 16 months, you had most markets as a bull against the U.S. dollar. Does it mean that the dollar has finally bottomed, is finding strength against the broad basic currencies out there? No, but it is against certain ones. It's very likely that the pound could stay sideways. It is currently in a downside correction. That's the way we're viewing it. When it topped out here in June, this was the high where it's been rallying up against the dollar for over 14 months. This little corrective slide here is no big deal. Now, the interesting thing about this current currency is that we had this buy signal right here. This was a bullish engulfing line buy signal. It was a counter trend or short-term counter trend signal, but the overall trend for the British pound had been sideways to higher on the monthly and weekly. From March into July, we kind of chopped around. We set these highs here, and then boom, this is when we have settled into this area where before we tried to get through here. We only pierced a little bit, and boom, we're right in the middle of the range where we've been for basically the last 5 months. So the question is, will the raging bull come back, or will the bear remain? So if you look at the downward sloping resistance that's keeping this market in a bearish market, like if you're coming off here and viewing this as the beginning of a downtrend, a longer term downtrend, here's your peak. Here is your lower move high, or lower move low. Here is our lower move high. We are right in the very beginning stages of what could be viewed of as a longer term downtrend. Or this has just been a correction for the longer term trend, which it was needing to have a blow off little pullback in the pound US dollar. See, this is where when we were topping out in this area here, and we had this little head and shoulders pattern up here. This is when oil started topping out at 75. This was also when we came into the beginning of the summer, and that's why we took the oil commodity part out of our long-term currency trending formula, because it had been helping to drive the currencies for months. And once you get to a level of 75 bucks a barrel, economies start to slow down. So that's the reason why we took it off the table, because we were still coming out of a pandemic. Lots of lockdowns were still being loosening their loads, so the demand for oil was skittish on multiple parts of the world. Summertime now has pretty much put most of the world, except for Australia, which is in total lockdowns. I feel for those people, what's going on in Australia is crazy. It's not conspiracy stuff, folks. Like, it is no joke out down there. Like, with the people, what Australians have had to put up with over the past year, between their government and what's going on, is very harsh. You know, people not being able to go home, people not being allowed to leave, people not being allowed to do pretty much anything, and the damage it's caused to businesses, not to mention the moratorium that China has put on Australian goods, raising tariffs and cutting orders for raw commodities, because they've been sucking them up for actually the past 20 years. They've been really stockpiling, but especially in the past 10. And now they're opening those gates to their businesses to help try and curb inflation the communist way. But that really doesn't really curb inflation at all. It just sets off other markets. It caused undue demand because of supply being sucked up by them, and they're hoarding. So it has lots of, I'm not even going to dwell on it too much, because the economics of scale are so wide-reaching, but that is really hurting and impacting the Australian dollar, US dollar. This is something that I've been talking about for the past couple months, and it really started to be emphasized, what was, I think, 5 weeks ago, when China put the moratorium on cutting all of their demand from Australia. So that being said, the oil part, which definitely impacts the pound, the Australian dollar, the yen because they don't have any, the EU because they don't have any either, really. But the UK, they're one of the drivers when it comes to oil. So strength or neutrality as far as the pound versus the dollar is probably going to be where we're going to go for the next few weeks. I would be very mindful of this. So short run, we came to our top here. I want to show you on a fib basis how this has been panning out. So if you look at from this high to the low, harmonically, this is beautiful. It really is. And this is where you got to be very mindful, like I said, of these pivot points. So if you use the 50% and the 0.618, let's get rid of this so you can see it. You can see that the market topped right here. And it's been bobbling and having a tough little period in this little pocket of these pivot points between $1.39.90 and $1.39.10. You can see where it was resistance and had this area before where it was either boom, this is what accelerated above it, or it really got choppy inside there. It has tough, either running into a rally or falling in as far a break. So it's either support or it's resistance in this area. We came off this lower move high. We made a higher move low, a lower move high. Now we made a lower move low. So short term on the daily and hourly, we're bearish. I would be cautious. if we take out this high here at $1.3955, this is where I would say you're probably going to see a good breakout to the upside for two reasons. Should we take out $1.3955, what happens? Well, for one, we make a higher move high after a lower move low. That puts us on the neutral to higher forecast. Should we take out $1.3955 and get above this current high here of around $1.3980 something, let's see, $1.3983, which is only, that's only 25 ticks away, or pips away. That's a big deal, because that would mean we would have set a higher move low after this lower move low here, meaning lower move low, lower move high, lower move low, and then boom, make a higher move high. That would confirm strength from this current upside bull trend. Remember that long term, or intermediate term, we're kind of sideways. We were in a downside correction, but now for the past couple weeks, we've been holding firm. The long term trend is a bull, the super long term trend. So this could become an issue here where we're bottoming today and then make a run at resistance. So use caution here. Even if the dollar index falls under pressure, or doesn't fall under pressure with most currencies, the pound being the second biggest weight may actually do so. All right, let's see real quick. Do we have any questions on the chat room? We got some people on the website checking us out. We got some people on YouTube. Hey, any questions, guys? I'm just going to put something on the chat for these guys. Oh, let's spell that wrong. Okay, there we go. All right, so put a little thing out there on YouTube, and here we got Twitch. We got some watchers. All right, well, say hi or ask some questions. We want to get to them if we can, that's for sure. Okay, all right, so British pound, US dollar, we're looking at as far as for bulls or for aggressive bears. If you're trying to sell here, you don't want to sell in the hole, so be mindful, like I said, of this $1.3955 area. If you're bearish, I would say above here, you're on the wrong side, at least in the short run. I would expect to find a pocket of, especially for weak shorts, probably a pocket of buy stops in this area above $1.3955. And because you'd be coming in front of this high here, I would say you probably have a bunch of people trying to get into the market, because at this point you're looking at an upside breakout from this downward sloping resistance, as well as making a higher move high in front of a major pivot point looking to accelerate the trend to the upside. Now, for a bear, if you are selling against this area, which is actually it's a very low risk sell right now, let's see where we can get this market down to. So let's just say that we're in sideways, not even a true bearish mode. It would be very easy for us to correct back down to this area here. So let's put a little elliptical thing here. So let's say this market continues to erode, and it's very possible that it could, and let me tell you why. Remember that plug we had for that book, High Probable Japanese Candlestick Patterns, written by myself, available on Amazon.com? Well, right here you have a dark cloud cover sell signal. So this sell signal here does target $1.3776 down to $1.3727. So short run, we have a sell signal, which is where our downside resistance is capped out at. This is what sets our tone for our trend. As you can see, it's a mild sloping trend. It's pretty much a 45 degree. That's a good Gann angle. It's a good trend angle, whether you're going up or down in any time frame. So, and as far as on a daily basis, yeah, it looks good. It would also put us into the bottom area of this consolidation area where we've pretty much been in for months. As you can see, we bottomed here a little bit below. See, we were below it 1, 2, 3 times, and then we were trading above it 1, 2. Maybe we'll trade into this again a third time, just like we capped up in here. So basically from $1.3990 down to $1.3727, this market is one big range trade. You can almost sell into this pocket and buy into this pocket for most of what had occurred during this trading period. So downside, we have our target. we are not overly bearish. We'd have to wait and see for what conditions would pile drive it through this area for us to really start to get bearish. I think that the low that was set, what is this, on July 20th, 2021, that's probably secure for a much longer than it would be with the euro. Remember that like the euro, US dollar here, this one is in a bear market. It's making newer move lows. Don't try and catch a falling knife. I'd be very cautious selling into it right now. If anything, I would wait for a nice rally to sell before anything, before really looking at the euro. British pound, however, we have a low risk sell set up. Our entry point was the close on this day when we had the, this is a dark cloud cover, sell signal. And the close was $1.3904. We are now trading at $1.3873, so 30 pips below our sell price. So if we get a chance to rally, and the high today was what? It was $1.3894. So yeah, if we could sell into this area here again, that's a low risk sale price. Remember, our stop area is right here above $1.3955. We actually have a, we are bullish the pound to some degree. We are currently in a long position, just to let you know, in the British pound Australian dollar. So we are long pound, short Australian dollars. That's because we are short-term neutral to pound to short-term bullish to pound, and we also are very bearish Australian dollar. However, the Australian dollar happens to be getting a little lift currently. So our trade was looking better this morning, and right now, excuse me, it has pulled back and is trading near the lows. So we'll see what's going on, but that's where this trade comes into play. So if this actually continues to trend lower, and we have weakness, that'll put a little strain on our pound Aussie trade, but probably not so, because if the pound is falling to the dollar, odds are the Australian dollar is falling even worse because it's not making new move lows. Remember, once again, this will be all clear. Just like the euro was down on lows, this is right in the middle of a neutral trade. So the pound, like I said, is not in the same dimension as the others. We have divergence. Now let's get to the US dollar Swiss. Like a balloon underwater, this thing took off on Friday. Here's the other thing. It did pull back a little bit. Let's go on the hourly. It opened up and then shabam, it's been just trending higher for the last few hours. So this going into the US Open, which is, it just happened. Let's go to the daily chart. This is where I'm very leery of, say, the pound really getting any big sell-off. Let alone the euro bouncing too high, because the US dollar Swiss, this is riding its highs. Like, this came back. I mean, like I always tell people and remind them in our videos and whenever I'm talking markets, is that markets tend to go out like they come in. We had this severe sell-off. We bottom. We had, once again, a high probable Japanese candlestick buy signal right here. We had a bullish engulfing line. Let's get rid of this because that makes it too hard to see. Right here, this was our buy signal, and over the past 3 sessions, we have had follow-through. Big explosive news. Now, see, this is where I tell you, remember why we started with the numbers? We only talk about the numbers typically in the beginning of the week, or when there's big, or we'll just be reminding people of a couple numbers as the days go by during the week when we produce videos. Unemployment did this right here. Okay, this had been making lower move lows, lower move highs. The US dollar Swiss was looking like it wanted to stay neutral to lower. This is a big bounce. Coming back, exploding back like this on Friday. Not to mention having this follow through where we're hovering just below the highs of the day, showing US dollar strength. Once again, this is proving divergence exists in the currency markets right now. Like I told you in the beginning of the video, you have to be mindful of this. So don't be looking at the dollar index as just a driver for the broad base of currencies out there. If anything, look at the dollar index as far as what's going on with the euro. Because the pound, like I said, there's a disconnect. The Swiss, to some degree, is also in that category, but that would be probably it. On any individual day, if there's a big play in the dollar, obviously, like Friday, the dollar was up against everything going into the close of the week. That's a one-way trade. Those don't happen all day long every day. So now we're back to free-flowing currencies. So just be mindful of that. Unless we have a big dollar bullish move or big bearish move because of these numbers, expect this divergence to remain, meaning dollar, US dollar, Swiss, probably going to remain strong going into the numbers on Wednesday and Thursday. British pound, probably very sideways. The euro, remember, there's a number economic numbers coming out for the EU. Remember, the Brexit. UK does not care about the numbers that we talked about coming out in Germany and what have you. Do they impact them? Yes. Are they as severe? No, because there is Brexit. They are no longer part of the EU. So, but the Swiss are, so that does impact them. So we'll see what goes on with this. As far as from this recent high to this recent low, we are coming into some big resistance. Now, irony is, where the euro isn't making a big move and the pound's not making a big move, the Swiss happens to be trending like a balloon underwater Friday and even today on this range as we're talking. Now, it fell just short of our 0.618 trend line. So remember that this market has been in a bearish correction. Interestingly enough, we could be coming into some nice resistance today. So, short term, now think about this also. Like I said, there's divergence. We're showing dollar strength here. Let's say that we start to see dollar weakness really prevail in the pound and the euro, where all of a sudden the euro starts to get a nice profit-taking rally. The pound shores up a little bit. That's going to drive the dollar index. Well, that will probably help to run out of gas for this move right here. This will start pulling the plug, which comes into a nice little area. By attrition, we're going to go through this downward sloping resistance area just over time if we stay up at these levels. So it's not going to be out of the realm of possibility to get above here or to just breach this line right here. I would expect more sideways than anything else out of this market over the next couple sessions. The only way I become very, very bullish, in which case then I would say the dollar itself is a raging bull, would be if the U.S. dollar Swiss gets above 92.32. I think this is a good profit-taking target. If you're long right now, I would just be mindful of your stops. I would use the low of today as your next guide after today's trading and just keep raising it just because we're in this sideways buffer zone. You can see how much sideways action had occurred. Most of the trend move may be done, may not be, we'll see. But it could become a chop fest in this area. However, only above 92.32 do we become a very big bull. I think you're going to see a lot of selling pressure once you get into this area right here. So this is our key breakout level, 92.32. Anything above there, this means that the dollar is just bashing most other currencies. It would also mean that we would have a big sell-off in the interest rate market. So if you see the 30-year and the 10-year making new lows on Wednesday and Thursday, meaning trending lower, so having a follow-through, like right now, remember, we are neutral. It's not going anywhere, so the bonds are just hanging out in this little area between 165 and 164 where they had been for the bulk of the last week or so. But if we get below that, then that gives a lift to the U.S. dollar, and that would probably catapult the U.S. dollar Swiss above this 92.32 area here. All right, so as far as downside right now, we don't have any. We do have this buy signal that comes right into this area, today's trading. This would be capping it. Now is like, that's why I said keep your stops tight and be mindful of today's low. You don't want to let a winner turn into a loser. This buy signal, whether you bought into this move because you read our book and are a fan of high probable Japanese candlestick patterns or whatever your reasoning was to get long, be mindful of it. We are coming right into this 0.618 Fibonacci level, right into this downward sloping resistance area, good profit taking area. This signal is done. It doesn't mean that the market's not going to continue higher for the next 5 months. This could be the low of lows for the next 5 months for all we know. But short run on those signals, we are done. The market is also wedging here, as you can see. Now we have a support base. Now we have our downward base. Let's see which way the market wants to really go. Does it want to stress resistance, or does it want to start to wiggle and jiggle and all of a sudden wind its coil before we have a breakout one way or the other? So bulls, we have already said, keep raising your stops. Be mindful of the fact you might be running out of gas on this trade. Remember, we are still coming off a high that made a lower move high, a lower move low just a few sessions ago. We are not making a higher move high until 92.32 is breached. So anything below that, we are looking to run out of gas and at least fall back into some congestion. All right, no questions so far. But we have a few more viewers on YouTube. So YouTube's getting a good showing today. It looks like on the Twitch, though. We're not having too many people. They're coming in and out. All right, so wait, let's go to the US dollar JPY. So, interestingly enough, dollar made a run at resistance earlier today. Like the euro and the pound, the yen is showing strength against the dollar. We do have, once again, a buy signal that occurred a few sessions back here. This is another bullish engulfing line. It's one of our favorites from our book, High Probable Japanese Candlestick Patterns. Irony of it all, in the Japanese yen, we had a bearish engulfing line, sell signal that started off this slide. We have a bullish engulfing line that has put in this short-term lower move low. So harmonically, this market is trading very well when it comes to the high probable Japanese candlestick patterns. So let's see what we have going on here. If you go from this high down here, we have come out of the downward sloping resistance, keeping the short-term trend intact. As of Friday, where we had an accelerated rally. Remember, this market was already had a buy signal 2 days before unemployment. It followed through. The question is, how high would it go? If this is just a corrective move, you can see that we've already come into, we crossed the 50% line on Friday and also again today. Let's get this, clean this up. So right now we are into, if this is just a short-term counter trend signal, meaning if this was at the beginning of a real long-term bear trend, which we don't believe, then that would be probably where we're running out of gas. This is touch and go. This trade here, if the overall trend for the US dollar yen has been a bull for a long time, and there's multiple reasons for it, we have a longer term upside target of 112.5 to 113.5, or even 114 even on the longer run. That's months out. However, it is very likely that we are going to just make a grind of a trade back up towards that area over the next few weeks. Short run, we've been making lower move lows and lower move highs, so we have to go with that. The trend is your friend. But the short-term trend is definitely a bear. So be mindful of this high. So we have this 110.53 area already as a fib level, 110.61. That is the big breach. If we get above that, that's a lower move low and then a higher move high. Putting the trend in neutral, which would have the longer term trend obviously in neutral from May up until now. However, if you look at this market has been going up, up, up. So the overall slope of this trend has been very slight since this correction there. So we'll put this right there. So this market is wedging on a daily basis. It's broken out to the upside, although it's coming right into our target zone. Now, because this actually is going with the longer term trend, this buy signal here is a trend signal. That's where you look at it, since it's not a true counter trend signal, only on the short run is it, that this may be the base for a very longer term wave up. And if you look at the symmetry here, when we broke down off this high from the end of March into the end of April, it's pretty much about the same width or distance as when we broke from this beginning of July into this beginning of August. So from peak to valley and from peak to valley, we have pretty much about the same slope as well as the same distance of range from high to low. So that means if the trend overall is solid, we found a nice base and we could go we're going to be trending sideways to higher, with the 110.61 definitely being our key breakout point. If we get above 110.61, it is just a hop, skip, and a jump away from this high here. Now, there could be lulls in the other currencies like the euro and the pound. The yen could explode through here on any given day, and especially remember there were some Asian numbers, and especially when it comes to PPI and a couple other things, those things from the other currencies will have impact with trade with Japan, which they're struggling with a whole bunch of things too. So if trade with the EU starts to become restrictive or have variables will make it more costly, meaning more inflation, that will be restrictive of the yen, and then we'll see as far as how much strength the yen can put up versus the pound and the euro off of those numbers later in the week. But right now we can see dollar weakness is prevailing on the short run. Let's look at the hourly chart. As you can see, is in just a lower move low, lower move high. Most of these hourly bars have ended in the negative. So right now, I would say we're riding the lows. Selling pressure is there, but don't be surprised if we have a major slingshot effect over the next couple sessions. And even today, we can come back. Remember, we were flirting with new move highs when the markets opened last night. Now, the Asian markets have wound down their day. The European markets will be closing in the next hour, so hour and a half. So we're back to the U.S. trade. This could be a profit-taking sell-off. Be cautious. Look at how much this market has rallied. We hit the first point. We haven't gotten to our next point, which is our threshold. Above here, that's why I said be cautious. So if you're an aggressive bear, I would say you can sell against this $10.53 to 61 range. Anything above here, you're very foolish if you're short. As far as being long, I would be cautious right now. As far as with your stops. If anything, I would start to raise them. I would use the low of today once the session is over, unless we're on the lows. As far as raising it, the stop from Friday would be definitely off of, definitely Friday's low, I would say, should be any stop. Anything below there puts you at the bottom of a chop zone, and it could just drift and not really give you very much bang for your buck as far as reward to risk ratios. So, as far as upside, we know our key threshold here. We are starting to run out of gas in the short-term trade here from this buy signal. We do not have a sell signal, and even though we have been trending lower. So, however, on the hourly basis, we haven't been trending lower. We've been making higher move highs and higher move lows. We're coming off a higher move high today, so be very mindful of that. So we are very sideways when it comes to the US dollar yen. We'll see how this trade manifests over the next few hours. All right, Australian dollar, US dollar, this is a key one. It is trying to find some support. It's been had a sideways grind higher over the past few weeks. Friday it had a big sell-off just like all the other markets, and even today there was follow-through overnight when the markets first opened up. Now it found support. As you can see, this low from today actually is kind of key. This market has been trying to hold up. I would say that instead of really saying that it's grinding higher, it's just holding a base. But this 73.15 isn't very far off. We're at 73.63 right now. It's been very tight, these ranges. The ranges for most days have been all about the same width. There's not much going on. We haven't had any trending here. We're coming off this lower, make this easier, this lower move low. We've set a lower move high. The question is, if we're really going to find strength, at the very least, we got to probe above this 74.30 area, and I wouldn't even look for very much beyond that. Remember, this overall market is in a bear market right now. We have this trend coming here. We have this slope right here, which it did come out of by attrition. Okay, so this right here sets us up for sideways. This is the only downward sloping resistance that sets us up for actually any type of real strength. So we would have to get above this high right here at 75.90, so basically 76 even, to really begin to see any strength and even think of it as being so. Otherwise, we are in a sideways to lower trade. Remember, I did give you a precursor when it comes to Australia that between the lockdown measures and everything else that's going on with them, it's going to be very, very hard for them to maintain strength in the Aussie currency. If anything, I would say it's right. You can sell. This is a range trader's delight, like selling into new highs. How much does this thing breach resistance? Not much. But when it comes to support, it has no problem sinking down a half a buck or a buck before it starts to go sideways again. So just be mindful of that. Right now, we are an aggressive bear. Below 74.30, we maintain a bearish outlook for this. No matter what, we're coming off of lower move lows and lower move highs. The trend is your friend. We are seeing just a short-term profit taking going off of what happened on Friday going into today's trade. Aussie and the other Asian markets are winding down. Now we're getting the U.S. that is taking some money off the table on this, but I think that the bears are going to jump on Australian dollar, U.S. dollar, even if the dollar starts to rally versus most currencies, especially the euro and the pound. I would see those as knee-jerk reactions that are not going to influence the Australian dollar. The Australian dollar is still looking in a sell rally forecast. Be mindful of that. Do not try and catch a falling knife. if you are long, I would definitely make sure that the low of today, if we reverse gears today or anytime this week below today's low that was set overnight, we're leaning right on support. We're looking at lower move lows. Do not try and catch a falling knife. I'd be very cautious, even for range traders buying into lows. Like selling into highs is low risk, and then waiting for the market to slip back and then take your profit, waiting to sell again at a higher level or back around this area here, especially around 73.88. Once again, just keep these into your head. Also, remember that New Zealand dollar, US dollar, there is a potential rate hike coming up. What does that mean? If rates go up, their interest rates go down in price. That also means that Australian dollar becomes weaker as well, because there is more reason to, in as far as that trade zone, be strong and long the New Zealand dollar, US dollar. Now, oddly enough, what is shaping up here is a head and shoulders pattern. So we could have some extreme divergence going on when it comes to this market. So here we have a potential head that is already formed right here. Okay. Now, we could say that somewhere around here, this is a shoulder. We could even say that this is a shoulder right here, and that this is a shoulder right here, meaning that we'd already have a breakout. But I don't want to get too pressy on that one. So here's what I'm going to say. I'm going to say that we have made a shoulder, a wide shoulder out here. Okay. And that we had made another shoulder right here. All right. So before we get too crazy on saying, oh, it's already broken out to the upside, no, not so. This is our key breakout level. If this head and shoulders pattern is really there, this is where it sizes up. For multiple reasons. First of all, we're coming off this low. We made a lower move high, higher move low, higher move high, higher move low, higher move high, higher move low. I think you know where I'm going with this. We have an uptrend going on the daily and the hourly. In front of this news, strength is shaping up. I think what's going to likely happen is that we're going to see New Zealand dollar versus the US dollar continue to trend higher and look for a breakout here at 70.90. If you are long right now and you are bullish for whatever reason, or you even see that ahead of this video, then I know you're with me on this one, and you're looking for, not for any major move, but for a breach of here to get back above, try and hit the 71.5. This is where the support base was here before it fell off. You can see how it chopped around off of that. Expect heavy resistance. If we blow through that, well, that just puts us into this, it raises our chop zone. So it goes from this area here back up to this area here. Also trending into it, then expect a lot of sideways, okay? So right now, higher move highs, higher move lows. For aggressive shorts, I would say, okay, here's your deal. You sell this market, anything above 70.90, you got to be out of it. You can't be short above here. It's too dangerous. You're going to most likely see a lot of buy stops from weak shorts, as well as breakout traders looking for an accelerated move to the upside. So probably a hot potato when you get up into this area here. So if you are an aggressive long right now, you play off the low of today, which if we keep reverse gears and fall back on the lows today, believe me, that's not a good sign, whether it happens today or tomorrow. So 69.79 is your base. Anything below there, I would say the bear is in full play, looking for to go back down and hammer support. Okay, so that means that if we fall below 69.79, we're back to 69 even and flirting with these lows that we set back in July. Remember, the interest rate hike expectations are that New Zealand is going to raise rates to help curb inflation. That's not how you curb inflation, but that's what they are going to do. And they have a little bit more room to do so than many other countries right now. So are they going to set the trend? Are they going to start something in motion? Now remember, if they do raise rates, that gives their strength. Even if their currency is in a bear market versus the dollar, it helps to relieve a little bit of that pressure. Okay, meaning that the New Zealand dollar will shore up strength versus the U.S. dollar. It doesn't make the U.S. dollar weak. It just means because of the interest rate component. Remember, If you watch our videos, we talk about interest rates all the time. I know there's some people like they interject sometimes or question the new followers, or why are you talking about the 30-year bonds? Why do you talk about the 10-year note? Why do you talk about the bund and the bottle? Well, that's because they influence currencies. They are a function of currency pricing. If you are ignorant of interest rates, you are going to miss all kinds of opportunities, let alone understand why it is trending or the way it is trending. So does it mean that in any given one intraday moment it's going to help you? Absolutely not. But as far as the trends and overall direction, absolutely it does. All right, so New Zealand dollar. Now let's go to the U.S. dollar, Canada. We're getting close to those cryptocurrencies. We definitely have some things to talk about there. U.S. dollar, Canada, interestingly enough, guess what there is here? So we had a buy signal, right? Let's use a different arrow. Let's use an up arrow. So see this down day here? And then we had this right here. This is a harami buy. This was our first buy signal, but then it was confirmed with a second buy signal that really makes it a big deal right here. So these 3 days right here, you have this low, or this last selling off day, we bottomed out here, tight little range, and we had 2 days of positive close. First day, whether you have this down day and this small little recoil profit taking day, that's a harami buy. It's a short term pause in trend. It is a somewhat decent buy signal in many markets. However, the only time I ever utilize it is when it is a day later, when it turns into a 3 inside up pattern, which is where it has a second day where it closes positive. That sets in motion the buy signal. That's a little bit stronger, and that's the one I really like. So if you read our book, High Probable Japanese Candlestick Patterns, which, by the way, when you go to our website, forex-trading-unlock.com, you go to products, courses, and services, you go all the way down here to High Probable Japanese Candlestick Patterns, and we have a page dedicated to it. You can always see what we're streaming. Like right now, it's showing what we just did. Here's a little video on the book, and we have also, you can click on this and you can buy, you can share, or you can preview the book. I would do so. It's a very helpful tool for Forex traders, futures traders, stock traders, options traders. It really opens up your mind to a lot of the ways how the markets wiggle and jiggle technically. All right, so coming off this, we have, now this market's been in an overall bear for the long term, and under so many reasons are we bearish the U.S. dollar, Canada. Even if the U.S. dollar, it becomes a raging bull. So right now this trend, this goes with the short-term trend, which is bullish. We made this low here. We've continuously made higher move highs and higher move lows, peaking out here at the end in the middle of July. We've come back here short-term, especially since we have this buy signal. We came off here with a high probable Japanese sell signal, ironically. So this, the high probable Japanese candlestick patterns are working in the Canada. This set our peak on this upside correction. This market had been trending lower for 16 months. This, for sure, was an upside correction as far as what our view of it was, and still is. It set the cap. We are not bullish this market. Overall, it's in neutral. Long term, it's still a bear. Short run, it's a bull. So if this is a trend signal and the trend really is becoming a longer term bull, then this low is very significant that was set a week and a half ago, where our buy signal comes off of. Any trading below here puts us back on the sideways to bearish campaign, because if we get underneath $1.2424, it means we will have failed to make higher move highs. We will be making a lower move low. So right now we made this high. It's a higher move high, higher move low. If we stall somewhere in this area and then fall back on support, that would mean a lower move low, or lower move high and a lower move low, going back to the intermediate trend and longer term trend, which is bearish, meaning that you're probably going to have a hard pressed time trying to buy into the US dollar, Canada, no matter what the US dollar is doing with other currencies, okay? But short run, we do have a buy signal. So where does this have us going to? All right, so if we look at this on the fib level, 50% isn't that far off, and the 0.618 isn't either. All right, now let's look at this in another way. If we look at it off of this major low right here, okay. Oops, no, I'm doing this wrong. There we go. Okay. All right. So our buy signal here came right into this, right above the 50% mark. So from this high down to this low, if we take this beginning of this trend of the correction to the upside, it began here. So from here to here and pulling back, we've bounced just above the 50% level. That's key for the longer term uptrend as far as whether it can be maintained. So this low is big, meaning that if we fail, take out this low again, all bets are off. The major trend is there. So for aggressive bulls, no matter what, you need to be mindful of $1.2424. If we fall below this, you are on the wrong side. You are fighting the trend. You are definitely on the wrong side. Short-term trend has us popping up into this area. I would use caution. If you are a week long, once you get in this area, it's a great place to take profits. If you are looking to sell against this overall trend, I would wait until you get pierced $1.2617 up to $1.2662. This is where I would look to sell this market. Also, it capped out, if you notice here, also earlier, this is harmonically a good resistance area. If the market is weak, odds are it will not sustain a trade above $1.2662. Should it do so, well then these highs are in jeopardy, and then we're looking at a longer term show of strength for the US dollar versus the Canadian dollar. Because of the politics, it's not just a technical thing and what's going on, I think that it's very likely that we will not be able to maintain this trend to the upside. The slope is very even. By attrition, we're going to fall through it. That doesn't necessarily make us bearish. What does make us bearish is should we get a failure from $1.2424. So, because this buy signal, if it doesn't reach this area here, this would cause a failure of the buy signal. And if it does get up to here, well, obviously you take your profit. The signal is over, and then if the market falls back on this support and falls through here, we are looking at a big bear. All right, BTC USD. Let's talk about some crypto, guys. We got 4 people hanging on with Twitch. If you guys got any questions about any of the currency cross rates, you let us know. Now we're looking at the Bitcoin US dollar. We're going to take a look at some of these. We've had quite a move in the crypto space. All right, Bitcoin US dollar on the daily. Look at this. We have a little more follow through to the upside. So after riding support for a long time, in the middle of July, we finally started to set this rally. We made this higher move high, started to fall back. Looked like we were just setting in the top of the range for this choppy BTC market that's been going on for the past few months. And look at this. Ba-boom. We made another leg higher. So strength is in the market. This is our key pivot at 37,359. I would be mindful of that area there. Oops. Let's move this there. And let's move this right there. Okay. All right. The slope is rather steep. So it's good, probably likely that we are going to start to go a little sideways, get a little choppy here at this $45,000 mark. For crypto bulls, everyone's happy and saying, hey, look, we're going up, we're going up. It's all back in motion. Well, if you look at the overall trend from when we capped out our high, we did break out. So this is key. So when we came up here, this was our big resistance. We fell off of it. We made this low here, and boom. So the overall trend from the long-term high, which we set back here in April when we capped out at $64,890 some dollars, we boom finally came out of this thing. So we are no longer looking at this as a corrective wave higher. We are confirmed here with a higher move high, a higher move low. This sets our base. But if we fall below 37,000, folks, be very mindful that it will probably be back at 28,000 in a heartbeat. So we're trying to raise our base of support. We're looking for higher move highs and higher move lows. Let's see what happens. We are strong today. Remember, the dollar is taking a little bit of a hit today. And now, obviously, because of that, we're seeing Bitcoin go up. Now, when Bitcoin sells off, we tend to see a lot of interest in dollars, yen, or major currencies. So when you do have a major sell-off, it does start to have an impact on the real currencies out there. So short term, we're a bull. Daily wise, hourly, you can see we're making higher move highs and higher move lows. I would be careful if you're selling Bitcoin right now. I hope it's profit taking. I would be very mindful of shorting. I would wait for a reason to sell. Something like what you had here when we had this was a Harami sell signal followed by, and then this was not a 3 inside down day, which that would have been a really good sell signal. That's probably why this was just a corrective thing. Remember when we said earlier with the Harami sell signal in that last example, they are good stopping points. A lot of times they are markers of where you have short-term highs and lows, but a lot of times it goes sideways. So that's something to be mindful. That's why we like the 3 inside up or 3 inside down combination better than just a Harami. This, because it pierced a higher move high before it went down here, this is not a 3 inside out. The low has to be set on the prior 2 days to be a 3 inside up day. However, you did have this negative follow through, which helped to batter support, but you can see how it turned around very, very quickly. So BTC USD short term bull. ETH USD, this is the one that really accelerated. Talk about a big rally. This one really showed how much strength it's had since the 19th. It barely skipped a beat here when it had a little bit of a correction. Now it's getting a little choppy. Now, we were talking, if you look at our videos, when we were trading back down in this area back in the end of July, or end of June, beginning of July, the fair value we were looking for around $3,000 as our price target for Ethereum. Can it go up to 4,500 and make new highs? Absolutely. This thing can go to 50 grand for all we know. Short run, as far as technology and costs and viability versus other factors in the crypto space, because now there's so many offshoots of the technology, especially Ethereum network has a lot of promise in the banking sector, the financial sector, and a whole bunch of other transactional venues out there as far as for business is concerned. One of the problems I do have, though, I do see the value in this technology and how people could see some sustained store of wealth, if you will, because of the sustainability of the technology and the usefulness of it. Everything does get replaced eventually, so I don't see the long term going up to excessive levels just because there's other competition out there as far as technology. So at that point, it becomes speculative and not a value of what it really does. And when I say that, you look at the blockchain and from Bitcoin, how it set everything off in motion. There are certain crypto assets that do have a true viability. Bitcoin does, Ethereum does, the offshoot on Ethereum with other cryptocurrencies now that are off the Ethereum network that are growing themselves. That's a big deal. There's sustainability there. When we get to the Dogecoin, that's a totally different story, meaning that the adaptability and the longevity and potential longevity of the technology. Ethereum on some capacity and Bitcoin, they can evolve and move forward into the future. When we get to Dogecoin, I do not see that. So we've hit our initial price target value here of around $3,000. We're above it right now. I would use cautious selling into this. We could still obviously continue higher as the bulls are raging in the crypto space, obviously. But remember, this thing sells off very, very hard. So if you can, take some profit, and that would be a good idea if you have the ability to do so. As far as looking to buy into this, you're at a sustainable point where you have to expect a downside correction, especially like we could come back to at least 2,500. This is our big support base. Only if we fail this low here, when we had this minor correction a week and a half ago, this would be our base in the sand. Only under here will we say neutral trade, not necessarily bearish, but you can see where this is at. That would keep it in the main part of this range that's been in for the past few months. Or we maintain this bull trade. Very steep though. I think that sideways is probably more the call. All right, let's look at XMR, US dollar. This one hasn't broken out quite to the upside as Ethereum has, but this is a technology that's also viable. I like the sustainability of Monero. That's why I like Ethereum. This is, but just like how I said, Ethereum most likely is capped out at the 3,000 level. We have this price at around 360, 350. 400 really would be really high for Monero. I think that it has a good store of value between 200 and 350. Once you get above 350, it starts to run into that whole what's the cost and value. Like, is it more of a store of asset, or are you buying the technology? The technology has true value, and I think it's very strong between, especially this anywhere above a buck 50 to 200. I think is a solid buy. Going up to, like I said, 350, 400 is the cap. At that point, I would look to take some off the table and look to buy back down lower. As far as a long-term hold, I would be cautious selling into this because of the fact that now it's making higher move highs and higher move lows. Short run, it's a grind of a bull higher, but as you can see, it has not exploded like Ethereum or Bitcoin. I'll be very mindful of that. Let's look at the Doge. Sorry for the noise in the background, folks, but that is, I guess people didn't see the on-air sign. So Dogecoin had a big explosive move a couple of sessions ago. Now it's at 25 cents. Like I said, we're not up on this technology. It has come off this low that it set back at the end of July, making a higher move high, higher move low, but we don't see sustainability here. This is a pet rock crypto, if you will. We look at it like a penny stock that's a pump and dump. The technology is the problem, the biggest problem. We don't see sustainability of users. Like, the people who like Dogecoin are all the people that have invested money in Dogecoin. As far as the technology, we don't see people looking at it in a longer term sense. Oh, we have a question from about the Euro US dollar. We will be back in that in 1 second. Well, let me finish up with Doge for you, okay? And then we'll get to that. So anyhow, unlike Bitcoin, unlike Ethereum, unlike Monero, which we're long all of these, just to let you know for transparency, we had taken some Dogecoin in as a payment. Once it gets if it gets it back to the 45-cent level, which is where we had gotten it at, we just hadn't had a chance to get out of it. We had literally held it for a day, and that's when it started leaking. So we got it it was right around this capped area. It was right there in the beginning of June. So there's your excuse for not taking cryptos as payments. So we're down on this position from the work we had done. So we're looking for a spike. We're hoping that these all these crypto Dogecoin supporters help run this thing back up, because that will help us out. But let me tell you something, we're looking to get out and not keep anything of this. This is just, there's no reason to. All right, so enough of that. We're not dwelling on the Doge. Let's go to the Euro US dollar while we have our Arsham stream. Hi, Euro US dollar, buy or sell. I believe that's what you meant to say for each hour for the 1 hour. All right, so on the daily, we have it kind of mixed and unsettling. Buy or sell? Well, okay. Well, if we go with the trend in Arsham, it is a sell. We're making lower move lows and lower move highs. You can see now that we are almost 1 hour into the U.S. trade. We have failed to breach the high set a couple hours ago. Now we're in a holding pattern overall. It's not much of a range. We're looking at 117.69 down to 117.50. That's what worries me as far as being a bull. If the hourly was so strong, we should be grinding higher. We're not doing so. We started out the day and boom, we tanked. We were strong in the very beginning on the when the market opened, we held, then all of a sudden we tanked, set this low. It looks like right now, even though we've been grinding higher move highs and higher move lows, should we take out and get below this part here, in the lower part of our range, 117.5, we're only 4 pips away from that. We go 4 pips lower than this, I see us going and testing this one here at 117.42. This is definitely the release. If we get below 117.42, look out below on the daily chart. We are going to start to really hit the lows. So that's what I would watch out for, especially now that I think what happened was you had a profit-taking rally going on against the dollar overnight, and now that the U.S. markets are open, we're following through with the bearish pattern, and we're going to hit support. That's the way we're trading it and looking at it. Let's see if we can get some confirmation here. So GBP, USD, that isn't positive anymore. When we started this video, it was. So for your question there, yeah, buy or sell on the hourly. We're a sell on the hourly for the euro US dollar. That's the way we're looking at it. We're looking at weakness, and yeah, so nice question. Hopefully we answered that for you. So all right, let's see, where are we at here now? So we ended up with the cryptocurrencies. We washed through that. Let's take a quick jump around the currency world once again. All right, so Canadian dollar still trying to make its highs. This is the one we're looking for it to bounce off this $26.17. Remember, if we fall back below $24.24, all bets are off. New Zealand dollar, remember that they have the interest rate announcement coming out this week. That is helping to make this market continue its bullish, short-term bullish, higher move highs and higher move low trend. We do have this head and shoulders here that is formed. Remember, be mindful of this 70-90 area above here. We have a very bullish breakout. It could diverge from the Australian dollar. Oh, wait, that's right. It already has, because that's the one that's looking weaker. Speaking of which, let's look at the AUD USD. This one here, it was trying to go higher when we started the webinar and talking about it earlier. Now it is negative on the day. That is pretty much what we're looking for, is for this to continue lower and to bat our support. If this takes out the lows from today, that will be a very, very good trade for us. All right, New Zealand dollar, US dollar. Once again, we'll just review that. Remember, we looked at Aussie. Here's New Zealand, much different. This is where we see strength. We see weakness in the Aussie. This is helping to confirm our outlook with the interest rate environment. Japanese yen. Here's the other one. Remember how when we first started out, it was on its lows. It's coming back. Be mindful of this on the hourly. It's making higher move highs and higher move lows. I think that last hour we were waiting for the U.S. markets to open. They've opened. Now comes the real trading with the dollar. The European markets are closing. Everything is done. Everyone had their follow through with the dollar trade. Now all of a sudden getting their profit taking. Now we're going to see where momentum really lies. U.S. dollar bullishness obviously is coming into play. U.S. dollar Swiss, remember, look at this. Remember how we were talking about when we were doing it before? It was below this area. Now we're butting up against this downward sloping trend resistance, keeping the trend intact. This is big. We're through our little target area here. The buy signal is complete. Right now, we are out of this trade. Now, if you get above here at 92.32, that sets a lot of strength in the U.S. dollar, especially when Swiss's flight to quality. It's very interesting to see where things are at. Let's see. Interest rate market has barely moved. Bonds are slightly higher. Okay, so that's not stirring up. So the interest rate market isn't doing anything to the currency market today. So they're on their own. Obviously, dollar bulls are back in place. You can see it here with the U.S. dollar Swiss. British pound, U.S. dollar. Once again, now it is heading towards its lows. We have our downside target here. We have pound strength versus other currencies, but not versus the dollar. But overall, we are not very bearish. Euro, U.S. dollar, we're going to end on this note. And yep, there we go. Still lower on the day. It was higher when we started the video. Now it's lower. Not much of a range, but we'll see how things manifest over the next hour or two. I would say it's going to be a grind now that the rest of the world is shut down. Watch out. Be careful, because as we're making new lows, we're going to touch off a bunch of stops. So all your weak longs, anyone trying to buy and catch a falling knife here, they can get squeezed later on this afternoon. So if you've been enjoying what you've been seeing and hearing here, then we hope that you will check out our YouTube channel, Forex Trading Unlocked, and our Twitch channel, Forex Trading Unlocked. Please subscribe to them when you get a chance. Share and like and pass it on to your friends. Share it with your other friends in the Forex community and the trading community. And remember that the book High Probable Japanese Candlestick Patterns is available on Amazon.com in paperback and Kindle versions. So for those of you that hung on, I told you there would be a special announcement. Our anniversary for Forex Trading Unlocked happens to be today. So after this video, we are going to set off a free Kindle giveaway. So if you give me 10 minutes from now, you can go on Amazon.com, and if you're an Amazon Prime member, I think you get to, Amazon Kindle Prime member, that you get to read it anyhow for free. It comes in your monthly cost. However, we are offering it for free where you can download it. It does have an expiration, but I think you get it for 2 or 3 weeks. So you can read the book, and if you like it, you can always purchase the Kindle later or the hardcover, which we would definitely appreciate. So if you want to know how to do that, also, let me give you one quick look. You can go to our website, and then at the top of the navigation bar here, products, courses, and services, click on high probable Japanese candlestick patterns. And then, boy, you can hear the thunder and lightning. We got a little rain. That's good. We need it. You come down to here where it says buy. When you go to that, it takes you to Amazon. So right now it has the Kindle Unlimited and the paperback. This will be able to read for free, Kindle Unlimited. But it's, if you're on Kindle Unlimited, you get it for free. Anyhow, it's $9.99 purchase price, but this will be free in a couple minutes. I'm going to jump on Amazon right now. And for all of you that have been hanging on Twitch and YouTube, this is good from today for the next 5 days. So for Monday, Tuesday, Wednesday, Thursday, Friday, and into Saturday early morning, this will be good. So we're going to jump on Amazon and take care of this in just a moment. Thank you very much for all your time. Remember to like, follow, and share our stuff on social media, on YouTube, on LinkedIn, on Twitch, wherever you can find us. I'm Teddy Keckstedt from Forex Trading Unlocked. Remember about our Kindle deal. I'm going to post this link right now in the chat. Oh, that's right. I can't put this. It doesn't post. Oh, wait. Yes, I can. I can do it on through here. All right, there's 5 people watching right now. Okay, here is the link. So give me 5 minutes, okay? And then I am going to get that taken care of for you. So in fact, you know what? Why should I end the stream? I'll leave this up for you. I'm going to do this while we're live. Why not? I can do this. So you bear with me. If you have any questions, leave them for me. I'm going to sign into Amazon. I'm doing it right now. I'm going to go to bookshelf. Oops, we don't need that. Go back to here. Promote and advertise. Okay, free book promotion. Create new free book promotion. That is going on right now. Oh, I'm sorry, guys. You guys are looking at the logo instead of the live action screen. Okay, at least look at the Euro US dollar here while I'm doing this for you guys. Don't leave. I'm going to get this all set up. All right, so when do you want it to start? Start date. We're going to start with August the 10th, and the end date will be August the 14th. All right, so save changes. All right, so today is our anniversary. We want to thank all of you for tuning in. All right, so the promotion is set. So on Amazon, so you got to wait 24 hours. I'm sorry, it starts at midnight tomorrow on Tuesday. So if you go, once again, like I said, you go to our website, or you can go to Amazon, but from our website, you can't miss it. You go to products, courses, and services. You hit the high probable Japanese candlestick pattern tab right there. It pulls up the page. And by the way, you can always use this and tweet it out to your friends and give us a little support when you're out there. We always respect that and like that. And on any of our pages, you can do that. You can tweet them out. So there is a little video about the book. You can see all kinds of stuff about it. And then also you can check out the book. Obviously you can buy it, but right now it's free. So when you go to buy it, you'll have the opportunity to get it for free on Kindle version only, not paperback. And remember, you can share it and preview it before you want to do that as well. I would suggest here you can check out the little video we have. It comes in and it describes a little bit of stuff about the book. So I want to thank you very much once again for your time today. You can hear the rain in the background. For those of you that are watching our stream right now, we are going to set up a new stream in about 10 to 15 minutes with a trade signal that's going on. And oh, you know what we didn't cover? We didn't cover the British pound, Australian dollar. So remember how we are right now along the British pound, US dollar. Excuse me, the British pound, Australian dollar. So British pound is showing a little weakness versus the dollar. Australian dollar, US dollar is showing weakness versus the dollar. So that means that those two currencies are weak and the dollar is strong. But when it comes to a cross rate, now we look at the British pound, US dollar. British pound, US dollar. Oops, not the British pound. Sorry, British pound, Australian dollar. So this one had shown a nice challenge of resistance early on the hourly basis this morning when it first opened up. Fell back, as you can see, over the past few hours. It made a higher move high, and as of last hour, made a lower move low. Okay, could be a potential head and shoulders on the hourly, or it's just a profit-taking slide before its next move higher. So be very mindful of what's going on here as the dollar gains strength versus both the pound and the Australian dollar, especially if the pound doesn't sell off very much and the Australian dollar does start to make a turn. We're looking for an accelerated move to the upside. On the daily basis, we are looking at this to stay above this low from last week at $1.8756. This is where our stop. See, our stop is in at $1.5750. That's where we have it a few pips below. We always give a little bit of a range just in case there's a double bottom or a double top. Our target to the upside is at 191.75, so way up in this area here. So we are long this currency right now, just for transparency's sake, just like we were long those cryptos. We don't want to, mislead you or whatever, but we are not trying to encourage you either. We are already in the trade. This is our risk level here, except actually let's move it to 50. All right, there we go. All right, so that is where the risk level is. Okay, so there you go. You have the live trade that is going on. We're looking for a little bit of turn of events. Right now on the hourly, we're taking a little bit of heat, a little bit of resistance, but with the way the dollar seems to be shaping up and gaining strength, it looks like we may be all right on that trade. All right, so do we have any questions? We do not have any more questions. All right, cool. All right, well, we want to thank you guys very much once again for tuning in here. For our video, for our weekly analysis. Please leave comments in the comments section on YouTube, and we will get back to them. We're on our chat rooms, and we will get back to them and refer to you in our future videos. Once again, like, follow, and share on Forex Trading Unlocked for YouTube and Twitch. And I am Teddy Keckstedt from forex-trading-unlocked.com. Check out our site for all your Forex needs, and don't forget to pass us around on Twitter and stuff like that when you're on our website, and share our pages with the world. We would really appreciate it. Take care. You have a great trading day, and hang on. We are going to have another live stream coming up with a trade.